Good morning, traders. It's 8:02 a.m. Chicago time on the 29th of January 2016. Happy Friday. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Some key news figures overnight. The Japan stunned global markets by announcing negative interest rates, 5 to 4 votes in favor of the measure, just marginal. Interest is set at negative 0.1% for excess reserves. This means that banks that are holding money with the Bank of Japan are now having to pay a fee to keep that money in the bank. The measure is intended to encourage lending and investment as opposed to sitting on money. Japan is still struggling from deflation. And in fact, just before the announcement, um, the CPI, the Japan January Tokyo CPI year on year came in at negative 0.3%, indicating deflation versus 0%. CPI X fresh food came in at negative 0.1 versus 0.1, positive 0.1 expected. So the Bank of Japan is still doing whatever it can to stimulate inflation, and this measure was not expected, but here we are. Just as a note, um, the news feed that I use had this rumored at about 9:25 p.m. Central Time. The announcement came out at 9:35 p.m. Central Time, and the S&P moved approximately 20 points. So I just want to make sure. I just want to make sure for those who can use a high-end news feed, just to drop me a note, and I can hook you up because we have a deal for followers and listeners for a very, very good news feed. In fact, the news feed that I've used since I was in equities back in 2000, um, that with pricing that I can make available to you. The Eurozone January advanced CPI estimate came in at zero point 0.4 year on year, came in 0.4%. In line, CPI core year on year came in at 1% versus 0.9. US Q4 advanced GDP annualized came in Q on Q came in at 0.7% versus 0.8. Personal consumption 2.2 versus 1.8. Consumers in the US are still propping up the economy, and Xerox is splitting into two companies. Oil overnight is up 181 basis points, gold down 10 basis points, treasuries up 29 basis points, the Eurozone treasuries down up 50 basis points. And then we saw the Asian equities pushing higher, the Nikkei at 2.8% positive, Hang Seng 2.54, the Shanghai 3.09. The Japanese yen down 2.05%, currently 2.05%. Eurozone equities, the FTSE's up 1.05%, the CAC 40 up 65 basis points, the DAX up 44 basis points, and the S&P 500's up 69 basis points. The US dollar index is up 93 basis points, pushing the euro down. The euro is down 81 basis points against the dollar. Overall sentiment, our read on sentiment is bullish. Reaction to the Bank of Japan news, indices equities lifted. The risk appetite has increased overnight and is continuing to hold the market up. The market's opening in a slight gap above yesterday's high. Let's take a look at the technical picture here. So, just a general overview of what we've done so far. Let's put this up here. Uh, we pushed down since the beginning of the year. We pushed down. We have bounced up, and we have gone into this sideways trade. I'm still expecting a retest of that 1915 quarter area to match the balance, the highest volume price from way back in August. We did put in a lower low to the August low back here. I The overall view is that we have pushed up. We have had our continuation move. The expectation is this is likely to chop, attempt lower, but overall, I'm expecting it to start pushing higher short term. I'm still looking for 1915 to be tagged from below. We've gotten close. We've flirted with that price overall, but have not gotten to it. Volume lately has been elevated. We've been trading in the 1.5 to 1.7 million contracts in the regular trading hours, and the range has been in line. Um, Lately, it's with what we would consider to be higher volatility. Range has consistently held above the one standard deviation from the most common value. We're generally getting 20 to 30 points. You can see here what we would consider normal is 23 and a quarter, and we've been holding at or above that for quite some time now, since Q4 of last year. So that's the big picture overview. Uh, yesterday, yesterday the expectation was for a responsive. The key element that we were looking at yesterday is for the market to hold the middle here on the open, and then we were looking for to start basing for a push higher and to start moving towards the 1915 as a primary hypothesis. The secondary hypothesis is for it to bounce around and test this middle zone again. We have a clearly defined triple distribution profile from the Fed day. We have three distributions here that we were fighting with, and hypo 2 was for it to attempt higher, fail, and then start to move down into this low volume node here in the mid 1840s. What it ended up doing is neither. Um, it did battle the high volume, low volume node here. This created a very short term opportunity to get short. It was very difficult to see because it happened so quickly early on. Let me clear my throat. It happened so quickly early on, and so the opportunity was gone. Once we broke through the opening swing low, which is this dashed cyan line here. These two dashed cyan lines are the opening swing. Once it broke through, we're looking for the short side, and our target was the lower LVN, which is at 1978. Again, very difficult to jump on that trade. I'll show you that in a minute. In fact, I was going to do a quick walk through yesterday's trading in a replay sequence, but I don't think we have time for that. We got down and tested what? We tested the 1865 point of control. 1865.50 was the naked point of control that we had before, and we missed it by a tick, and we saw this strong move up, and then we went from impulsive down to corrective up. We took out the IB low, and we ended up in this terribly choppy middle zone, even though things were shaping up to look like we would take out the IB high and have another neutral day. That's how things were shaping up yesterday, but it just could not muster up the strength to push through the opening swing high, this opening swing low. Again, you can see it hit the opening swing right there, and it just sat in the middle. Very difficult trade yesterday afternoon. Very misleading trade, and so as a consequence, of course, you have to experience losses, and it's just part of the game. So that's how things were yesterday. If we scoot this most recent microcomposite profile forward, we see that the most traded price, this black line here, is at 1890. We're trading 1895 above. The overnight high pushed through yesterday's high. It pushed through this 96, 1896 quarter high and has gone to 1903. Recall the 1903 is something we've talked about several times. I'll show you where that comes from again. 1903 is an area that we targeted before. Here's the 1903. It comes from right there. It is the key low volume node above, and the key low volume node below is approximately 1943. That's that low volume node we were shooting for yesterday in the mid 1840s. I mean 1843. And it got to 1903 overnight. And if you recall last week, the high on Friday was 1902. 1902 quarter. There it is on Friday. I was correct. 1902 quarter, and here we're back at 1903. We've consistently found sellers at or above 1903. We've consistently found buyers at or above 1865. At or below 1865, and that's the range, folks. This is where we're stuck. We're stuck between 1903 and 1865. This market is gathering energy. It is compressing, and this means that we're likely to have a very strong move out of here. My anticipation is to the upside, looking for 1915, been looking for 1915 for a week now or more. I'm looking for the key point of control to be tested from below for the market to finally decide what it wants to do. So what's our plan for today? It is Friday. It's been a very busy week, FOMC week and so on. So I don't want to, I definitely in my trading today, I don't want to press anything. Meaning I don't want to push trades to a point where I'm trying to get more yield out of them than I would normally expect. It is Friday. However, seeing as we're opening on the edge of the prior day's range in a balance zone, the key expectation is for the market to chop around on the open, attempt higher, and I expect it to come down to 1885 to base. The value area is valid yesterday. It's not as clean as I'd like it to be, but it is valid. So the expectation is for the market to be responsive this morning back to 1885. That's 10 points of range to the 1885. If that fails, if the market chops around, attempts the value high in the 1890 area, 91, and finds a base there against the MC point of control, then the overnight high is vulnerable, and we're very, very likely to get the 1915 because that would be well within a sessions range, and that would be my target upwards. My expectation overall is for responsive for it to come back and continue to inhale more more traders on both sides to gain energy for the next move. And in doing so, it has to advertise. It would have to advertise lower if that's the plan. I'm not saying that that's what it is going to do. Nothing's definitive in trading. I don't want to sound definitive, but if it's to take a push higher, an impulsive push higher, then it's more likely to push down, advertise prices down, pull in more buyers before it consolidates and starts moving up and through. Okay, so primary hypothesis responsive to 1885 for about 10 points. If that fails, if it's not able, if it finds a base at around 1890, 1891, then that's hypo 2, and it's likely to push 1903 and get 1915, and that's well within, statistically, that is well within 1 day's range for this product. So that's where we stand. I won't drag on much longer. I'll leave you with that. Maybe on another day I'll spend maybe 5 or 6 minutes on a prior day's bar by bar walkthrough and show you how things set up as the day progressed. It's pretty nifty to be able to do that. It's a very useful exercise to come back and tell you how the opening swing is generated, uh, as you can see here. But I'll go through it in more detail and just walk through and narrate what the day has done, so you can see where the opportunities may lie in the approach that I'm using, and looking at things bar by bar and seeing how they form. See this strong move down here with no delta, and then as soon as it starts to break this prior low, a lot of delta comes in, a lot of sellers come flushing in right down here. It's flat in this area where it started to move down, but as soon as it took out this weak low, look at all these bottoms here. We had a very strong flush, and that's basically showing stops getting squeezed out. Those participants who were long and got stopped out are not likely to participate on the long side for a while. They're likely to wait for lower prices. So the expectation is for it to continue rotating down. There's your confirmation of the opening swing low from back here. There's the opening swing low. The opening swing is the first high, the first clear high and the first clear low, preferably through the opening price, which is this dotted green line. Once we see this, we anticipate that it's likely to rotate down. It's got a magnet below it in the point of control from Wednesday at 1888. And so as we move forward, we see that becomes a target. There it is. It tags it and it bounces right off of it. So now we're looking for a mid trade. It stopped just a tick ahead of the mid, and then it breaks through. It starts to squeeze higher, but overall the sentiment is lower on the market. But anyway, I didn't want to do this now. I wanted to walk through this someday, and just show you how the information I'm telling you or the hypotheses kind of show themselves in the market in hindsight. I hope you find all this knowledge, sharing of knowledge, helpful, and I hope it's impacting your trading in some positive way. It is not smoke and mirrors, hocus pocus type of stuff. Can be applied to stocks. It can be applied to ETFs, to Forex, to definitely commodities, to pretty much anything that has enough participation volume in a proper auction, and has a price. You can apply a volume profile approach to it and really focus on reading the auction, because when you're throwing on some size in the market, the thing that makes you stand strong is your understanding of the overall context, and the context is best understood and best held when you understand how the auction is proceeding and what the story behind the participants is. I'll leave you with that. Good luck, and I'll catch you on Monday. Take care.